Hello, and welcome to the Wade Borth podcast. I'm your host, Wade Borth, and in every episode, my goal is to get you to think differently about how money works and ultimately to empower you to take control of your money and your personal financing system. Hello, and welcome back to the Wade Borth podcast. Today, we're continuing our series going through Nelson Nasher's book, Becoming Your Own Banker, The Infinite Banking Concept. And today, in the past, we have Nicole Tate, who has agreed to go through this with me and to have a conversation from her perspective, as well as somebody that's been doing it a long time. And interesting is the more we talk, the longer you've been in it. Now you're starting to talk like you've been doing it a long time as well. And part of that's because we had a conversation before we started the recording about how you're using your policy more and more and how it makes a lot more sense once you have that tool to implement it. And it's like any other tool. If you don't use it, you lose it. We've talked about that in the past as well. But again, Nicole, thanks for joining me today, and I'm looking forward to our conversation today about an even distribution of age classes on page 71 of the book.
Yep, thanks for having me. It's always fun.
You bet. And maybe just speak that real quick. As you've had your policies and as you've taken this idea and this thought process, again, it's more about a process than anything else. It has changed your perspective. It's changed your kind of how you think about money and how you actually use money when you start actually implementing the tools that you have in this process that we're trying to teach people about. Would you agree with that? Maybe you can expand on that.
Yeah. One of the things that has really become very clear to me over the last several weeks, and I've known this all along and I've experienced this, but I'm using my policies more. And as you use it more, you have more experiences. And one of the things that has been so exciting for me, if you want to use that term, is the fact that when you have a loan on your policy and you pay it back, that money is back in your pot again. It's back in your own pool. And so I did a calculation and just averaged out over the years how much I've paid out in car payments and credit card payments and different various types of loans that I've had through financial institutions. Added that all up and thought, what would my life look like if all of that was in my own financial pool instead of off in somebody else's now? And that was real. The number was $400,000 to $500,000 over the course of my lifetime. And That's probably low.
I was going to say that's probably understated just because you don't think about the things that you forgot to finance or that you maybe even paid cash for and didn't apply the process and the thought process of saying, okay, I need to repay that cash purchase if those are coming into play. So I would guess it's way understated. I would think that there's a real definite understatement of those dollars when you start looking at it from that perspective.
Yeah.
So again, thanks for sharing that because that is really interesting when people start thinking about how much money actually flows through their fingers and goes to somebody else's system versus lost and gone forever. That's exactly right. Well, let's talk about Nelson's book, An Even Distribution of Age Classes. I think there's a lot of misunderstanding about this chapter, but I want to start off with just where he starts the chapter off. He says, and he has a Bible verse that he quotes in here. He says, a good man leaves an inheritance for his children's children. This is interesting because most people wouldn't associate the idea of this perpetual wealth strategy going on from generation to generation. That's one of my founding principles, is that I want not only money, but knowledge and understanding of how to use money to be taught to future generations of my own family as well as my clients' families as well. So it's not just about lifting ourselves out of the bondage of owing banks money, but it's like, how do we lift the next generation up? Because I think that's where the real benefit of what we're doing is going to come into play, isn't what we're doing. We're obviously breaking the ground and starting that process, but it's really going to benefit that next generation or the generation after us that can understand and get what we're trying to teach and have the discipline to do what we have to do in order to lift ourselves up, but more importantly, lift those future generations out of that bondage of indebtedness to banks and to Wall Street and to all the other people that want our dollars.
I think one of the things with this chapter that I come across people sometimes who say, I've worked hard for my money, I've done all of this stuff for my kids, and if there's something left for them, fine, but I'm not going to change my life or live a lesser life just so that there's something left for my kids. And when I hear that, I hear a lot of fear and trepidation and worries about there's not enough to go around for everybody. And it makes me really sad because in most cases, there is enough to go around. You just haven't learned how to do that yet.
That comes from a scarcity mindset, quite frankly.
Yes.
It's like this huge scarcity mindset, think there's only so many dollars there. But what if, just imagine, if you just take your imagination and say, what if I could live the lifestyle I wanted to live in that abundance lifestyle, and at the same time provide this process and these dollars for those future generations? And quite frankly, going into this chapter, it's talking about, and I'll use my son as an example, is when he purchased his vehicle, now he's paying money back to the Borth family bank, which again, it's not a bank, it's just checking account number 2. And money's flowing back here. Is like that payment would have went to Wells Fargo. Now we're increasing our pool of money. And so the scarcity mindset is crazy because everybody's fearful that they won't have enough. Fear is a sad thing, right? We have to make sure that, are we fearful for the right reasons, or are we respectful? Fear can lead to a lot of bad decisions. It typically does. And
Reactive
so the thought
decisions.
of the scarcity, what's that?
Reactive decisions.
Yeah. And so the idea of, hey, we're going to take this money and put it away, because again, that's what we've been conditioned to think, is that money is only a one-use product, so we can only use it to buy stuff. What if we use it to generate income? So if we go back to Robert Kiyosaki, he always talks about, you buy assets that produce income, right? So this is the same way, is that we're buying an asset that can produce us income if we know how to do it. And that's really what Nelson was talking about in his book, is not having this fear of not having enough money. It's like, okay, we have enough money, we're gonna put the money in our system. We're going to warehouse it in our whole life policy, properly structured. And then when we need it, we put it to work. And now we can generate more money because we would have given that money to somebody else. So why not create more money? So we're just creating a bigger pool of money each and every time that we use it. I think
Nelson is clear that it's not about just leaving a bunch of money to the kids or the grandkids. It's about teaching them the same concepts so that they understand the value of money and they can use the system to benefit their lives, but also to benefit their kids and so on and so forth. It's not about just leaving a bunch of money to people. It's about teaching them the value of all of this.
Right. Yeah. And I think if you look at it, money without knowledge goes away real fast, right?
Yep.
One of my favorite books called The Richest Man in Babylon talks about that. Is that it's not the money, it's not the gold that is valuable. It's the knowledge on how to earn and keep that gold that is the most valuable. And so if we can marry the two, saying, hey, understand how money works, understand that you can control the banking function of your life, and then that's the important part. And then you add to it the capital to make that happen. We just advance it so much quicker. But it's for those that say, hey, I'm scared, I have a scarcity thought process of I don't want to put money away, I'm not worried about the kids. Then I ask the question, then why do you work so hard? Why are you working so hard to grow a business or a farm or whatever the client is doing for a living? Why is it that you want to grow that? And is that the legacy you want to leave? Or do you just want to say, I don't want to work any harder than I have to because I'm just going to be worried about myself? Sometimes we have to take a step back and, again, put in alignment people's actions with their beliefs, because a lot of times those aren't matching up. And I really believe if they take a look and say, why do I work so hard? Because I want to provide for my family. I want to provide those things that are going to make us happy and fulfill our what we want and make us whole, right? So it's like we put this money, generate this money so we can have abundance in all these different things that we want to do. And that's going to lead to a very fulfilling life that we want to lead. And again, this is just another process and tool in that cog to make all that happen. It's like we're trading the most valuable thing we have, which is time, for something that's infinite, which is money. We can earn as much money as we want. We just don't know it or we don't believe it. But we have to trade our time for that. And if we can get away from trading that asset, which is time that we have on this earth, for money, and started saying, I'm going to have my money generate additional money, then we have a lot of freedom of our time and relationships and purpose in our lives. But everybody thinks that, and that's why it becomes very emotional about this, is that people understand that they're trading. They don't know that they always understand that they're trading their time for their money. They understand that part of it, but that's the finite part of it. We only have so many hours and days on this earth that we can do that with. And so when you start talking about money, it becomes very emotional. And again, it becomes very easy to slip into that mindset of, hey, there's only so much there that we can garner, and I'm trading all this time for that money, so therefore I want it to be mine. Change our paradigm a little bit, change our perspective, and say, what if I could have more time we could have a bigger pool of money and I could serve my family into the next 4 or 5 or 10 generations. How much better would we all be because of that?
And what he talks about in this chapter about taking policies out on grandkids, kids, grandkids, as you begin to really wrap your head around the idea that you are building a system and this money, yes, you are paying premiums, but this money is staying in your pool of money. And so the idea that you're going to not use it for years and years, but you still have access to that money. And you go, oh, okay, I'm building this for my grandkid, but I still have access to it right now. This is my money that I can use. It's cool.
That's the realization most people don't get. So we're taking out on a grandkid or a child. Again, it's about building a whole system, right? That's the part we have to take a step back and understand. I think in the book, he says it's going to take 40 years to put this thing all together. Because you have to realize Nelson was a forester by trade. So he understood long-term thinking, right? Long-term thinking, short-term thinking in the forest industry was 20 years. It still took 20 years to grow trees in order to harvest them. Long-term thinking was hundreds of years. So we had to have a system built for planting, thinning, harvesting, and using it along the way. So he understood that all made sense to him, where a lot of people, I heard it said one time that everybody wants a lifetime plan that's done on a weekend. But they're not willing to really take a long-term approach to these things. But Nelson was there. He understood that because he was a forester by trade. But he said it was going to take 40 years. But when we understand that we're building the system, but it's not like a 401k where we put it away for 20 or 30 years and never be able to use it until that comes and we have to consume it. We're building the system now and we're able to use it at the same time.
Yeah.
So I think there's real power in those words you just shared. It's like building a system and then understanding that we have the ability, as we build the system, having a policy on us and maybe our parents, our kids, our grandkids, whatever it might be, how many generations are still here. And then by doing that, we have a system built. And that's what an even distribution of age classes talk about. And we go back to the Rockefellers. We read about them quite often. That's exactly what they do. Somebody dies in the Rockefeller family, that death benefit that they had policies on goes back to a trust that buys policies on future or on existing members of that family and or future members of that family as well. So now they have a perpetual system that kind of goes on.
Yeah. Yeah, it's this idea that you would build them on yourself and then your kids and then your grandkids makes so much sense to me. First of all, when the kids are young, and he makes this point here that it's there, you don't have as many issues, health issues typically to deal with. And so it's easy to get coverage on a kid. Now, some of the challenge is that the coverage, you can't get millions of dollars of coverage on a kid. But you start building that, and as the child grows up, as they become an adult, they can then get more coverage on themselves, or they can take these policies, fund them, and buy new policies. It just makes so much sense because it's an inexpensive way to continue building the system for the future.
Yeah, and I think in there in the first pages of that chapter, he talks about de-emphasizing the death benefit and emphasizing the cash accumulation and growth in there. And I think that's the real key is everybody looks at this, not that death benefit isn't important. It's just a complete different conversation. But what I've found is when we concentrate on the growth of our cash and a cash accumulation, because again, we want to take control of the banking function in our lives, what happens is if we're funding these policies to the maximum that we're allowed to fund them to, and over the years, we end up with a tremendous amount of death benefit, which at the time of that person's death now creates this huge legacy along with the knowledge to make this thing a perpetual system. And what did it cost us? It really cost us very little or nothing. I shouldn't say it didn't cost us anything because everything has a cost, but time and understanding what was going on. And we got to use the cash along the way, hopefully to use it to grow and build, to do those things that we want to do, grow wealth, whatever that might be. If it's growing your small business, family business. Again, this isn't a closed system. This is really an open platform where this is just the tool that we use to fund those wealth building ideas that we might have. If we want to grow, if we want to buy real estate or like I said, buy in our family business or expand our family business, whatever it is, when you have control of the cash and the ability to give a thumbs up or thumbs down to a new project, that's the true control that we want. And at the end of the day, when that person passes away, it leaves a legacy of dollars that we can start on that next generation. Again, this is the even distribution of rate classes that Nelson was talking about.
Yeah. Yep.
In this chapter, he bullet points a couple of things, why it's significant advantage to do these plans, right? It says covers multiple generations. So one of the things I've talked about with even my son, or why we took policy, if you look up from an efficiency standpoint, it's much more efficient for me to take a policy out on me than it is my son from a 5 or 10 year perspective. It seems silly, but that's the way it is. What greater way to teach somebody than by having them own their own asset? A policy with their name on makes them part of the system. Does that make sense? And they start thinking as an owner versus a customer. And that's a real benefit of having policies on your kids or grandkids or whatever it might be, is like eventually they'll understand that they're part of this system or this organization that you're building to, again, lift the whole family and future parts of the family out of the shackles of the current banking system. So that was the first bullet point that he talked about. You talked about underwriting problems are minimized, right? Again, now we have this tax-free buildup of cash. Remember, an income tax-free buildup of cash, which is a whole other discussion, but just understand that one of the greatest wealth destroyers is taxation. And so the more we can do to avoid that, and legally, obviously, the more we can do to avoid that, the better off we're going to be. And so then you can grow wealth at a greater rate than somebody that has to pay taxes, income tax.
Yeah. In the very beginning of this conversation, doing some quick calculation had been paid out on car loans and stuff over the course of my life. And one of the things that I've come across with people and that has happened to me is that as you start a business and you're getting up and running and you need cash, I have had people and have done this myself, K or to the IRA, and you pull money out because that's the only place where you have money. And if you're under the age of 59 and a half or not, in those types of situations, if these types of policies with cash value that you can get to tax-free, so there's more money in the pool that has leaked out that didn't need to leak out if you had the proper system set up. And business, right. I've seen them do this a lot. I've got a client right now that had to take money out of an old 401k to get a business that he bought up and running. And that money, the hope is that the business is going to generate enough revenue to replace that. Unless
they apply the very disciplined process saying, I took X amount of dollars from my 401k, had to pay taxes on it, so I had a net amount of whatever that was, and then say, okay, I need to apply a reasonable interest rate and make the business pay that back, but don't put it in the hands of the government again because all the restrictions that went along with it in the first place.
Yeah.
Again, it's about getting away from those restrictions and giving you the power and authority to make that happen, not the power and authority to somebody else. Again, the closer we can get to our money and having access to our money when we need it at the proper time is the real strength of using our policies and a properly structured policy that can hold as much cash as possible. That's what we want. That's where the real power of these things start to shine, is when we start taking control of that function and having access to that pool of money when we need it without anybody telling us, no, you can't have it because we don't like the idea. And we see it now. I was just talking with a gentleman yesterday that he's a construction company. He says credit for new projects have gotten much, much tighter. And
in this day and age, that's going to continue to happen.
Yeah, exactly. So yeah, that's a good point, is that, we have to think about who's in control and who's got the strings attached to our dollars and to make it happen. Because again, it's not about rate of return. It's never been about rate of return. That's where people get lost. It's about control and liquidity, use and guarantees of your money. That's the key. Who's in control of your money? And do you have a guarantee that money's going to be there when you need it? When no one else can get credit, think about the deals you can find and things are on sale.
Yeah. And rate of return becomes completely irrelevant if you have to pull money out of an IRA at the age of 59 and a half. It becomes completely irrelevant because for no other reason than the fact that you need it.
Right. Yeah. Desperate people will pay whatever they need to get their money.
Yeah.
Put yourself so you don't have to be in that desperate position. That's probably the biggest thing to say.
Yeah.
Another thing that Nelson puts just in these bullet points is generations paying the premiums can most easily afford them. It's like grandma and grandpa, they got the assets and now they're just trying to pass those assets on to that next or the following generations at the most efficient level. What better way to do it than start putting those dollars into policies on our kids and grandkids if you're properly insured to begin with? I think this is the real key. Make sure that the first generation has the proper coverage, has the proper policies in place, then start funding the second one, and then start funding this one. Everybody wants to jump to the end and think, oh, it's best that I have this on my grandkids. Yeah, it's important. I think it's a good part of it, but more importantly, why not have that same dollars going into a policy on you? And everybody's like, it's more expensive. Yeah, if you're trying to save $10,000 is going to buy very little death benefit compared to $10,000 on a 5-year-old versus an 80-year-old. I would agree 100%. But it's not about the death benefit. It's about liquidity and dollars in a policy. Get as much as you can at the first generation and then go on to the next generation. And he's talking about that because he had multiple policies on other people, partially because he was uninsurable. But he had the maximum he could have on himself before he went and bought policies on other people as well. And the other side of that equation is, and it's interesting now in today's environment, with inflation. Think about how great a whole life premium is that's set and guaranteed never to change.
Yeah, that is a really good point. And it's one of the things that we sometimes have to remind clients of. Policies that were put into place 30 years ago were really high. And now you look at those premiums and you're like...
Yeah. And maybe when they started, they go, that was a big premium. But just like a mortgage, but in reverse, at the end, that's when the big payout comes. But that's never going to change. That premium payment, again, premium is a solution, right? It's not the problem. We have to remember that we've talked about that as a premium is the solution and it's not the problem. But those premium payments are fixed. Now, that's not going to change. No matter what happens, that's not going to change. And as a percentage of your income goes up and your knowledge and understanding, I look at the first policies I took out. So I wouldn't say it's laughable because they're still substantial to a lot of people. But now we just make those premium payments and they're hardly even a thought. But when we first took them out, they were a thought, right? So all I'd say is get started, understand what you're doing, have a long range view of it because you're capitalizing your system. And when you start using it, then as time goes by, it's going to be less troublesome in your mindset because you become a lot more comfortable with that thought process.
Yeah, and it also becoming more comfortable with the process and how it works. But you can clearly see as time goes on that you're moving money from one pocket to the other. So yes, you are taking money out of your system, whatever, out of your bank account and moving it to your bank account. It's still there. It's just in a different spot.
Yeah, that's a great point. Most people look at this like a 401k deposit, right? Yeah. Especially like a 35-year-old. They're like, I have to wait 30 years to get their 401k money. Here you don't. You move it there. It's not lost and gone forever. It's not lost and gone for 30 years. But we actually encourage you to find ways to start using it today. Take that opportunity that comes along and fund it and grow your wealth by having access to dollars that you control. That's really what we're talking about. And then if people can grasp and understand that, then the rate of return and all those other kind of discussions that really are irrelevant go away because they understand that having control and access to money when you need it, when nobody else can get money, access to money. And I'll use 2008. I'll use maybe what's going on now that's when this really becomes powerful is because now you're the one that has access to control the money with no strings attached. Comes with some responsibility.
Yeah.
That's a different part of the discussion. You still should be responsible. You have to be disciplined enough to treat it better than you treat Wells Fargo's money.
Yeah.
But yeah, you're right. You have access to it. It's not like you're locking it up forever. And that's where people's mindset kind of goes. Like they think, oh, I'm not going to be able to use this. Absolutely not. That's exact 100% wrong.
We want you to use it.
We want you to use it, right? Put it to work. Goes back to that whole idea of when money flows, that's when it has its true power. So we got to find efficient ways to have that money flow. But first you have to build up that bucket of money. So now we can take and have it start flowing for our benefit. So the next point he talks about is passive income is assured. He always railed against the idea of retiring, but he also talked about need for passive income. Sometimes we want to have a passive income in our life. And once we have a bucket of money and we know it's going to generate a certain amount each and every year, that could be your passive. So we could use that to pay for our groceries and all that other stuff. That's the point he's trying to make there is that we don't have to hope that the market's up. We don't have to hope. We have guarantees and we have knowledge that that money is going to be there and it's going to go increase day over day or month over month or year over year, whatever it might be. And so when that's the case, now if we get to the point in our lives where we want to start generating a passive income, we can do that and still leave the pool of money for our system to work, to be able to finance our kids, our grandkids, house purchases, cars, whatever it might be, businesses, real estate, to grow those wealth items that we want to do. And again, at the same time, providing us that passive income. So there's a real benefit to knowing that you have that.
Yeah, I feel like I sometimes skip over that benefit because I get really focused on thinking about how can we use this today to do the things today, to build businesses or fund things. And I oftentimes just pass over the fact that, yeah, you can generate, and there's multiple different ways to do that. It's not, you don't necessarily just take the cash out of the policy. There's lots of ways that these policies can be used to begin to help generate passive income later in life if you want that.
And if we've done it correctly, we've also created other, what I would call wealth building items. And again, I'm going to pick on real estate just because it seems to be the easiest one to talk about because a lot of people understand it. We've maybe purchased real estate now that has a passive income stream. So we don't need to access our policies to get that passive income stream. We have other assets giving us that passive income stream because we're able to control the banking function and then purchase those items and have that real estate pay us back over the lifetime. Does that make sense?
Yes.
So, it could be a combination of the two, but it's just, again, you have to take your mindset from the scarcity thought process of, I only have so many dollars and then I have to consume those dollars at the end. So therefore, I'm afraid every day when I have an asset. Versus this abundance mindset that's saying, hey, I have this pool of money, I got to put it to work. I'm finding ways to put it to work so I can generate passive income in the future. And now maybe I have 2 streams of income or 3 streams of income. And I may never access those dollars in my policy because that's probably the place I at least want to take it from because it's doing so much other work at a different time. But you can if you want. Another bullet point, he says estate planning is greatly simplified. It is probably the easiest estate planning, most efficient way to transfer assets from one generation to the next.
There's no question you have that goes directly to whoever the beneficiary is. There's no middleman. As long as you're taking care of the details and making sure that beneficiaries are updated, and that's just part of the normal process that we do as agents as we're reviewing policies with people. But yeah, it's plain and simple. It goes directly. Nobody stands in the middle.
And really, it's reported to no one. Because it's not like it's public record. So there's a real benefit to that as well. And just giving an example, we own properties in a number of different states. We have to set up a trust. So we don't have to go through, my family doesn't have to go through probate at the time of our death. We have to set up a trust for each of those properties because, again, if you don't, then each state gets a whack at at your assets. It's a pain in the butt, right? So life insurance, I can own life insurance on 12 different people in 12 different states, and I don't have to go through probate at all ever. On those things. Again, as long as I put a beneficiary on it and it's paid out, again, it's about maintenance of these things as we go along as well.
Yeah, and it's leveraged. So you're paying a premium and that premium is leveraged to provide a bigger death benefit. So at this point, you probably couldn't find an investment that would have a rate of return that a well-structured whole life insurance policy would have. So I'm trying to pass along my investments and my open basis, but you can also pass along money that just goes straight to them with no question.
And I think the biggest distinction there is that you have a guaranteed exit valuation, right? So we know that what the very minimum is going to be for, as long as I'm paying the premiums in 30 years or 50 years, whenever I graduate from this world, my wife, my son is going to have a guaranteed dollar amount at that time. Yep. What other product can you have? Real estate doesn't do that. Stocks don't do that. You have no idea what else is that going to be. So you think about it, you have a contract that says if you want to quit early, it's got a guaranteed buyout amount. And if you want to wait until you die, it's got a guaranteed buyout amount when you die as well. You know what those dollars are. And so from an estate planning perspective, it may vary a little bit because if it performs better than the guarantees, there's going to be a little bit more death benefit. Hallelujah. But there's never going to be less.
Yeah.
How powerful is that when it comes to an estate planning strategy?
Yeah.
Then second to last bullet point he makes on page 72, which I think is huge, is wealth mentality is transferred to succeeding generations over a long period of time. How powerful is that? It's not the money, it's the wealth knowledge that is transferred, or the wealth mentality, as Nelson calls it. Because wealth isn't about money, it's about a thought process. It's about our state of mind. Because you think about it, and again, when this airs, when people listen to it, it might have gone by the wayside, but somebody just won $1.2 billion in the Mega Millions Powerball, or whatever that is. I don't play the lottery games, but they won $1.2 million. So which equates to, $500 million of a single payout, and you probably walk away with $250. When it's all said and done, I don't sure how all that works, but you walk away with $250 million cash in your hands. How many people that have won those huge lotteries have an understanding what to do with it?
Yeah.
So money isn't the solution to a lot of problems. It helps, don't get me wrong. It's the mentality that we think about and how we use our money. Because are we able to sustain that? What are we doing to generate even further increased wealth on it from that point going forward. Nobody's ever give that the part. That's part of the conversation that never comes up, right? That mentality is, and Nelson made that comment early on in his book, right? If you took all the money in the world, distributed equally, within 10 years, 80% of that would be back into 10% of the 80% of the wealth would be back in the hands of 10% of the population, because they understand how money works and flows. So money isn't the solution, it's the knowledge coupled with the money. Again, money's part of it, but that doesn't solve all your problems. It buys a lot of doodads, like Robert Kiyosaki says. You're buying a lot of doodads, but what are you doing to grow wealth? What's the mentality that you're using to grow wealth? And that's really what Nelson's book is about, is like, what are we doing to grow that mentality of wealth, or that thought process of wealth, on a daily basis? And until you can put it in action, that's really what this whole process is about. What are we doing to think about it, understand it, and then put it to action?
Yeah. Money takes a bad rap. It gets everybody's eye, and it gets blamed for a lot of, but money in and of itself is it's just money. You're right. It's how people think about it, what they do, what their mentality is around it, what their education is around it. Because you have to have money to let people blame money for all the problems that they have, when in fact It isn't money, it's the way they're approaching it.
It's their values, it's their stewardship, it's their education of money. And a lot of times you look at people and say, really their fault. You take somebody that makes $100,000 a year and all of a sudden now you give them $10 million a year for an income. How do you expect people to be able to fathom that or be able to handle that? What education have they gone through to prepare for that? And we look at professional athletes. Not everyone ends up in the same boat, but a lot of them they're making millions and millions of dollars. And at the end of their playing career, they don't have anything to show for it. And it wasn't because they didn't have enough money. It's just that they weren't taught, or they didn't understand the stewardship of the money. And we'll pick on Shaquille O'Neal. You look at the businesses and stuff that he owns. He's made more money after he's retired from basketball than he ever did during basketball. But the money coupled with his understanding and stewardship has made him, I'm going to call him very rich, has made him very wealthy. Probably the word I'm looking for. The wealth is not just about money; it's about knowledge and understanding how to use your money. I think that's what the wealth. That's where Nelson talks about wealth mentality. Is that wealth is the idea of taking money and how you put it to work to benefit you, or even today. And there's an interesting quote right here at the end, and maybe we'll leave it at that. Is that money won't buy happiness, but poor stewardship of money will definitely steal happiness. I think that's exactly what we're talking about. Any other last comments about the even distribution away of age classes? It's just about having a system set up for the generations in your life. Yeah. And then what is the benefit of doing that? It's a very long-term perspective, but it's also a very prosperous thought process, a very prosperous mindset that allows you to do that.
Yeah, I think this just really rounds out the concept that this is a process that we are building. And it rounds it out nicely by saying all the rest of the family, no matter what their age is, we're going to involve the rest of the family in this.
Exactly right. Well, that's a great place to end it. Thank you so much for that final comment there. Read this chapter, reread it, and you will grow tremendously just in your thought process around wealth and how you think about money. Thank you. If you're enjoying this podcast or know anyone else that might be interested, please be sure to hit the subscribe button and please leave a review. This will help this podcast reach and help more people by ranking higher in searches, and ultimately help more people get out of financial bondage. And don't be afraid to share this podcast with your friends and family, as we can be easily found on Apple Podcasts and Spotify.